November 2025. My name is Mark Gardner. Headline overnight, AI sentiment continues to sour, driving stocks lower. We had futures at the end of the day in the ASX session up around about 0.75. So we've not only given that back, but we've also, for the S&P in particular, we've given back nearly another percent. So down around about 1.6, 1.7% since the ASX shut. Obviously, yesterday we were fairly flat, as was the Nikkei, and the Hang Seng and China were down around about 1%, and the Euro Stoxx down about 1% as well. The Dow down 1, as was the S&P, Nasdaq, and the Russell as well. So, most importantly, we do, as I've said a number of times, we do have these really turning these indicators, the technical indicators here. We're into sort of sell territory for strong sell territory for a number of these now. And in fact, that was yesterday's. So I'm just going to do a quick update of this, and then because you'll actually see that we've gone into strong sell territory for both, for all three of the US indices. So we'll just have a quick look there, and there we go, updated now. The Aussies in a strong sell. We've really only got the Euro Stoxx. It's still got a strong buy on it. All of the major indices around the globe, bar the Euro Stoxx now, either in neutral or strong sell territory. If you combine, the averages of about 18 odd technical indicators. So that's obviously not boding too well leading into these Nvidia earnings. We're going to get those on Thursday morning, which is Wednesday night or Wednesday after the bell in the US session. But we did have news overnight that Peter Thiel, who was a billionaire and large holder of Nvidia, sold his $100 million Nvidia stake as well, and that sort of is on the back of SoftBank and a couple of others. So apart from Google, which is the only real shining light overnight, because Berkshire Hathaway revealed that they have a new position in Google or Alphabet. And then, that signals sort of Warren Buffett's continued optimism in the company's long-term prospects, but it's a bit of a changing of the guard position, given he's given out his resignation letter in the last couple of weeks. Well worth having a look at, by the way, if you want to go and check that out. It's all over the place. We are going to get the September jobs or the October payrolls numbers, which are the September jobs and inflation data. That will be on Thursday night as well. So we won't get a market reaction here in Australia until the Friday. So we'll get Nvidia first on the Thursday morning, after the market shuts, leading into those payrolls the payrolls numbers at minimum being released before the market open on Thursday night. So there could be quite a large reaction. This was a pretty broad sell-off overall. Everything barring Google really got hit. As you can see, there's some of the defensive names are still pretty green. Things like Johnson & Johnson, Amgen, Next Energy. I think the lithium stocks were pretty solid overnight as well. But look, broadly, you've got selling in, Apple, Nvidia, Microsoft, all of the chip stocks, and most of the financial sector, as well as some of the tech sector like Palantir, etc., and the likes. And I think Tesla was up small basically, but it's probably was sort of hit in the last couple of days. And as you can see, these AI services like CRM, which and Intuit and things like that are also being hit. And Dell was the worst performer in the S&P 500 overnight, on a bit of a poor update to the market. Ford apparently has announced a partnership with Amazon to sell certified used vehicles online overnight as well. So the automotive online ads like Carvana and CarMax got pretty smacked up on the back of that partnership. So yeah, there was some really sector-specific stuff sort of going on overall, but the main thematic was just generally that that the AI sentiment souring, and we could maybe see Nvidia results may salvage it, but we'll be very much just watching out for the price action overall. A bunch of investors obviously selling all of their stake, thinking that the risk reward is not in their favour. But I haven't really heard anything overly dour about whether the results necessarily going to be poor. So I think just generally it's been a couple of year run. We've had one of the better 3-year runs in the last 30 odd years, and I think people are just taking profits at the end of the day. And I mean, from our standpoint here at MPC, we've currently got a strategy open in the structured investments called Buy the Dip, where basically it's an index investment in the S&P where you get the lowest daily settlement in the next 6 months. And we're very happy to buy that dip because we're very confident in the long-term prospects of the AI thematic. But in the short term, we just think the market's overpricing things a little bit, and we're likely to see some pullback in the jobs market, and we're likely to see a little bit of reassessment of valuations, because the kind of results we've been getting every quarter from these AI companies, compounded, can't go on forever. And we just need to probably pare our expectations back just a little bit. And in the meantime, so tomorrow we're also going to get a bunch of different earnings as well from like Target and Lowe's, etc., and then Walmart later in the week. That'll really give an insight into the consumer and the spending patterns around the holiday season. So that'll probably be watched. I mean, Nvidia is definitely going to be the big show. Don't get me wrong, but it'll definitely be watched, I would imagine, given there's a lack of consumer data and a lack of retail sales numbers coming out of the BLS, and they're prioritising the inflation and employment data. So we may not see retail sales numbers for for at least a few weeks, if not a month or so yet. I haven't seen anything out of the G20 meeting. Really hasn't bothered. Really hasn't made any general headlines. Trump gave a very long-winded press conference this morning. It was, in summary, it was mainly white noise. There wasn't too much out of it. But yeah, we will get overnight as well. We're going to get FOMC minutes tonight as well. We'll just see how hawkish the Fed actually are on rates, or whether it's just been a few hawkish members all in a row that sort of turned the rate cut outlook very sour, which currently only sits at a 40% chance, so down a further sort of 8 or 9% overnight. So those rate cut hopes have really dissipated. I know, but I wouldn't imagine that. If we get a very poor employment number, they may come back up again at some stage. Whether that saves the market or not is a completely different matter, but we shall see overall. In a bit of a sell everything kind of theme, we had gold, silver, copper, platinum all down, as well as crude around about 1%. Haven't really been doing a lot, the commodities, although lithium was up 3.5 again overnight. Albemarle apparently leading that run. Uranium's continuing to dip, and as is Bitcoin, down about 2.8 in Bitcoin and down 2.28 in uranium. So US dollar not really moving up, about 0.26, which probably explains a little bit of the movement in the precious metals potentially. Iron ore continuing to grind higher, but look, we're still looking at those. We're still looking at the pretty that sort of pretty key level overall, which is it's a good 5 or 6% away. It's just holding a range at the moment between 750 and 810 per tonne. So in the CFDs is really the only market we can get. But very interestingly as well, though, was just flicking back to equities, was was the first close below the 50-day moving average for the indexes in the US since April. So whether it holds here or whether it continues to break down is, we'll have to wait and see. But yeah, they're pretty. We're at pretty crucial levels now, and we'll have to keep a really close eye on whether this technically breaks down over the course of the coming days on the back of these numbers. So I'm just going to try and grab the 100-day moving average for you. The 200-day moving average is at 61.50 in the S&P, and we've broken through the 100, and then we're at 65.32 is the 100-day moving average, which will probably be the next level of support, which would break an old low from October as well. So yeah, they're definitely worthwhile looking out for those levels, and we will we'll keep a very close watch on those. But as far as the ASX goes today, we've got ALS, Plenty, Technology One, and Webjet. Giving some updates to the market. Technology One will be pretty closely watched. It's been on fire lately. There's interestingly in that space they've got a new product called Plus, I believe, and with agentic AI, which is super impressive. So I've often been a touch concerned about how much of a premium this stock gets priced in. But I'll definitely be buying any dip in Technology One on the back of that that package, because it's essentially doing something very similar to in agentic AI is what Salesforce and ServiceNow and those guys are doing. It could definitely broaden their market, and they've obviously proven now they can go to another geographical area and have success in the UK, albeit that the UK and Australia are pretty similar. So yeah, I'll be watching out for I'll be watching out. The tech sector will be broadly pretty ordinary today in the Aussie market, and we just continue to sit on some cash here at the moment. We're 30 to 50% cash, and we've organised our shopping lists to potentially buy the dip sometime over the course of the next few months. When and if it does dip. So it's no shame in sort of taking profits there, but. Yeah, I would imagine the SPY was only down 0.6%. I would imagine if the index opens around there, we'll just see continued pressure during the day, given that, as I said, we had about the S&P futures were up about 0.6 or 0.75 thereabouts when the ASX shut yesterday, and they've closed down 1%. So it's from our close yesterday, it's more like a 2% move. But have a great day, everyone, and we'll chat again tomorrow.